Joining us now from Beijing to tell us what to expect from this year's event is Synergistics President Bill Russo. Bill's got over 25 years of experience here as well, so we're going to be listening very carefully to every word you say, Bill. So, you know, put this car show into context for us.
Yeah, I think the Beijing show and the Auto China in particular has become a centerpiece for the global auto industry. It's one of the few shows now that attracts virtually every manufacturer in the world. In China, there's over 100 licensed companies that can produce automobiles. Every international company is in the market. So you'll see a vast display of products that they're hoping appeal to both the Chinese consumer, but more importantly, the Beijing show has become a global platform for introducing new models that are to be sold all around the world.
Yeah, Bill, I was telling Stephen Engel earlier, who is at the on location at the Beijing Auto Show, that right now Detroit is passé and Beijing is the new Vogue. So let's talk about the cars on display. Is this about attracting first-time buyers? I mean, there's still a lot of people in China that don't own cars.
Yeah, I think if you look at the cars per capita number, it's much below some of the more developed markets. There's about 30 cars per 1,000. Individuals in China, so it's got a lot of upside potential. That compares to a number in the hundreds for the United States. The big news of the China auto market becoming the largest consumer demand market in the world is what everyone paid attention to last year. But I think when you look at the trends, there's even more upside potential as you look to the lower tier markets and how they're attracting first-time buyers. And that's what the global auto industry is paying attention to now, is trying to attract those first-time buyers to their brands.
Yeah, Bill, put a number to it, because last year we saw sales rising 50%, an astonishing 50% last year. What about this year? Does 10 to 20% on top of that sound realistic?
Yeah, again, the fundamentals are there for continued growth. I think everyone expected a slowdown this year, not a repeat. In the passenger vehicle segments, as you referred to, there was 53% growth last year, year over year. It's not going to repeat that. But the first quarter of this year was up over 70% year over year. So there will be a deceleration, I anticipate, in the last 3 quarters of the year. I expect they'll probably be in the upside of the 10 to 20% range.
You know, these car makers are going up market as well there in China. You know, they're making decent cars, Bill.
Better and better. If you look at this industry and how it's developed really on the back of partnerships with multinational companies that came here to set up joint ventures. That has accelerated the development of the local market, both in terms of supply and Chinese branded products. I think you're seeing Chinese companies moving very quickly. Companies like BYD, Chery, Geely, Great Wall, Independence. You have Shanghai Auto now with their own branded vehicles.
Well, Bill, I've got to just jump in there. I mean, how many car makers are there? Are they all actually viable?
Well, there's over 100 licensed to produce in China. They're not all viable. 20 brands occupy 95% of the market share, which means that there is an issue of fragmentation and a need to consolidate the industry. And the China auto policymakers understand that, and they're trying to push in that direction.
Well, meantime, we have Chinese automakers going out to buy these foreign brands, right, such as Geely buying up Volvo from Ford. Is that the trend, though, for Chinese car makers to try to go global, is to buy up these car brands that already have reputations globally, right? And it's to move up the value chain. They can't seem to do it on their own.
Well, I don't think that. I think what this is an opportunistic move on the part of a particular company, Geely, to accelerate its development. The Chinese car makers are developing on their own, and they will continue to get better and better. When you have the global auto industry really needing to rethink its footprint with an eye for the growth opportunity in China, it presents opportunities for assets to move from the developed parts of the world to China, and that helps the local companies accelerate their development efforts.
Bill, very quickly, if you had to buy a Chinese car, which one would it be?
Well, I like Great Wall's products. I know the company quite well. I think they assemble a very good car. I think Geely has moved along very quickly. I like what I see in the pipeline. I think the interesting thing to look at in this year's show is the more mid-sized and SUV utility-oriented cars that you see coming from the local companies. As I said, they're getting better and better. And I think within the next 5 to 10 years, you'll start to see Chinese car companies competing more head-to-head with the international brands.
Bill, thanks a lot for that. Bill Russo, there, president of Synergistics.